Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking back in on the MJ sector. A really exciting week with a lot of trading opportunity coming on the back of some bad news with somebody in the Canadian government talking about how it's going to take longer than usual, blah, 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 whatever, who cares? But the market saw it as a bearish development. So one thing that we do know is that there's always going to be people looking to buy the dip in this market. That's not going anywhere unless the news is that Canada is no longer going to legalize marijuana. There is always going to be people looking to buy the dip. So when we see panic and a dump, we know that the odds of a bounce are really, really likely. So we have people that are staying in their positions long and not flinching, and that's perfectly great, good for them. But you see a move like this, and it really, you just can't pass up this opportunity as a trader where you could get 10% more shares for the same amount of money and just build your position, build that long-term position because of this volatility giving that opportunity. So what ended up playing out is we had the dump begin on Monday, and it really got into play on Tuesday. Tuesday was the big dump day. And then once we saw the gap down open on Wednesday, we knew that that was a gap down that we wanted to be buying. And that's because we were getting oversold on the shorter term timeframes. So if you were watching how this played out on Wednesday, we had an initial gap down open and a little bit of some downside, and then we saw a bounce start to get underway. So we initially made bullish positions, or bullish entries, I should say, when that initial low was hit, and then we saw a bounce attempt. And it was a fairly weak bounce attempt. It did get a couple percent to the upside. And what that does allow us is to put our stop losses either at break even or at a very small loss. And so that because we're fishing here for a bottom without there being support, those stop losses are essential. So what ended up happening is the weak bounce attempt did not last, and we continued down to lower lows as the bears were still strong. So a lot of people, we were stopping out of positions, which is a good way to protect capital, and then reassess the situation, take a step back and watch how it plays out. So we ended up dropping all the way down, and let's see how significant this dump was. We were at 1180, and then 3 days later, we hit 955. So that is a drop of $2.25, and that is roughly, let's call it 22%, doing that in my head, close enough. So a big time drop in 3 days. Huge amounts of millions of dollars in market cap being lost. So the bulls did start to buy that dip on Wednesday. We saw the oversold bounce beginning to play out, and we started forming higher lows and higher highs. And then towards the end of the day, we could see very clearly that we were going to be forming a bullish reversal candlestick with a really long lower wick. So we were looking for the oversold bounce to get some momentum to the upside. We saw a really nice follow through on Thursday, and we closed up near the high of the day, which had us looking for continuation. And then today was pretty easy, sell the gap up. After the third day of the bounce, we know we're in a downtrend on the daily time frame. It's lower highs and lower lows. And I'm using weed here just because it is the sector leader, but most individual names followed this same pattern as well. There were some differences, of course, but this was the basic same pattern. So today was a day for profit taking, a day to lock in those short-term gains, and we can look to be reloading lower again. So the gap down is when we're looking to buy, and the gap up is when we're looking to sell. So now we close near the low of the day again, and next week we're going to be looking to see further pullback. And this is going to be, we're going to be looking for a pattern where what I call reaching an equilibrium. We see it all the time on all kinds of stocks and commodities on all kinds of time frames. It's when you have a dump or a breakout and you see a tightening range. So here's our dump. Here's the high of the bounce. We're looking to form a higher low compared to the low of the dump, and then a lower high, and we'll watch that range continue to tighten. So there's going to be another bullish entry opportunity. For those of us that took our profit here today on this gap up open, we can be looking to enter again either on Monday or Tuesday, depends on how that price action goes, but certainly looking good here in terms of further pullback because of the low close. So support I'm looking at is 1076, the low of today, and anticipating that is going to break on Friday, or on Monday, I should say. And the next level from there, we're going to be looking at, really need to be looking at shorter term time frames to watch the support that was built on the way up. But we're watching the low of Thursday down at 1024. And then again, if we look at those 5-minute time frames, we can pick out a lot more support levels by looking at the higher low, higher high pattern on the bounce. So the weekly time frame for weed, the bulls clearly defending the middle Bollinger Band support. Long lower wick is a good sign showing that buying of the dip. And we formed our recent consolidation down at 851. So this is a higher low compared to 851, 955. So still maintaining the uptrend of higher lows and higher highs. This bearish reversal doji after the breakout was a red flag to the bulls, and we confirmed it the next week. And then there's our pullback. So that was indicating the top. When you see indecision, that indecision candlestick with the bulls and the bears battling pretty evenly, after a bull move to the upside, indecision indicates likely consolidation. APH held up the best because it is the best looking daily chart out of any of these main names. I call them the big boys of the LPs. So we had a very clear support here on APH, and this made the bottom fishing buying of the dip a lot easier. $6 support. We bounced off 601 and then 606. So very clear psychological support. People were putting their stop losses just below that level. They ended up remaining in the trade, but look how similar it was. This is a bullish reversal candlestick confirmed, and then the gap up for selling close at the low of the day. So we're looking for further pullback here as well. We're going to be looking at the middle Bollinger Band on the daily time frame on Monday. That's going to be up in the low 650s, and we'll have to again be watching where did we form support on the way up on APH on the 5-minute time frame on Thursday. That's where we're going to find our support levels. The weekly time frame is still looking great. The bulls are holding these exponential moving averages along lower wick, buying the dip, and continuing higher highs each week. That also stands out as bullish to the upside. We do have a lot of resistance on APH right under $7. We topped out at $6.99. Let's zoom back. $6.99 back in November was a resistance level to be watching. We can see the high here of $6.99 on November 18th. Then we topped out at $6.96, $6.98, $6.99. So very clearly, that is a resistance level that we are seeing profit taking occur at. And once we get that break of $7, that's going to be a nice leg to the upside once that level does break. But obviously right now, we are looking to establish our higher low after this consolidation and looking for the range to tighten on most of these names. ACB, same kind of pattern. We had a big bear day Tuesday, gap down, bullish reversal candlestick Wednesday. Volume climax signaling the low. Volume climaxes often signal the top of an uptrend or the bottom of a downtrend. And in this instance, it was the bottom. Bullish reversal confirmation on Thursday. Gap up for selling here today. Close near the low. Support is 238. We're looking for that to break on Monday. And then we'll be looking at previous support levels on the way up from Thursday. And you can tell, obviously, by now at this point, I'm saying the same thing for all these tickers because the sector is very strongly correlated. When you get a spike in volume and volatility, the correlations to the sector overall really get strong. And that's because of a bit of the algos and the computerized trading kicking in together and a bit of the common trader emotional reactions that we see time and time again in these markets. So ACB on the weekly time frame, we did break this support of 225. That was a key level to maintain this higher low pattern. The bulls did buy that dip and we did close above that level, so it is still maintained as support. We just want to be a bit cautious there because that was a pretty significant dip. This was a very key support level that we did dip below, but we didn't close below it on the daily time frame. So 225 is going to continue to be a key level moving forward, and we'll look for a higher low to form compared to 221. EMC is in a lot of trouble for the bulls, and we're hitting all-time lows. And once we broke 252, that was the signal to step back. It's the exact opposite of blue sky breakout. We have no support at these levels besides psychological levels, and there's no price action to be going based off of. So we have been in a very bearish pullback here, multiple gap downs, and this bounce was weak. We saw the bounce play out, but if you look at the candlestick Thursday on EMC and every one that we just looked at, it's completely different, way weaker, not even comparable to those bullish days on Thursday. So the bulls bought the dip off 241 on Wednesday. Nice buying of the dip, bullish reversal candlestick. The bulls tried to follow the sector with some upside on Thursday, but we saw a lot of profit taking. And then here today, we hit a lower low and a new all-time low of 236. It is another bullish reversal candlestick. We just need to be really cautious because of the lack of any support levels. We are in oversold conditions. The RSI is under 30 on the daily time frame. So I would anticipate the bulls are going to show up and get a little bit of a bounce. but there are so many more bullish charts with a lot more support levels that we need to be very cautious here when trying to find this dip for EMC, because every time we hit a new low, we are going to see some pretty decent movement to the downside. And as soon as we broke this 350 level, that was when I no longer had interest in EMC until the bulls proved to me a new support level. At that point, 350 was very clearly the support level to be watching. And as soon as it broke, since then, we have not seen 2 green days in a row. We have not seen a bullish reversal candlestick confirmed. There has been no signal to get back into EMC at this point. You could say that this was a signal here back on Wednesday when the whole sector was seeing these reversal candlesticks. I would agree with that. But other than that, from 350 down to 241, there was no signal to be getting in this trade for the bulls. The weekly time frame, you can see this dump. Lower high and a lower low, and what stands out is increasing bear volume. The red flag was last week on increasing bear volume. We've closed at the low of the weeks 2 weeks in a row here, and then now not much of a lower wick here the third week. The bears are very strong on EMC. MJN, a little bit different looking charts as well, and that is because it is not grouped together with the main big boys of the LPs. But we've got a buying of the dip on Wednesday, big bullish reversal candlestick. MJN did have the biggest gains to be had on Wednesday off of its lows, and some of the biggest. I won't say it is the biggest, don't know offhand, but it was a very strong close. Follow through on Thursday, though, wasn't there, and it was there on a lot of those other individual names, and now we have weakness here on Friday, closing near the low of the day. So resistance is 308. I'm looking at support of 278. And we'll be looking down to 244. There are some levels in between again, and I don't have the time to go into all of these support levels on the shorter term time frames. This would be a 45-minute long video if I were going to do that for all these names. But we will be looking at the 5-minute chart. And just to tell you what I'm talking about here, on Thursday, you're going to see a pattern on all these names where we see higher lows and higher highs uptrending for the day. Every time we form a base of support of consolidation on the stair step and then continue to the upside, that is a support level to be watching on the way back down as support. MJN on the weekly time frame, we have a bit of a triple top, 343, 345, 346, and then a pullback. Bulls are still very strong on this weekly chart. We could pull back another 10% and still be very strong on this weekly chart. So the bulls are not worried long term, and we do have a clear resistance here at 346 going forward. CMED, all-time low being tested, 1028. We bounced off of 1035, so that was another potential bottom fishing level. Stop loss if the all-time low were to break. That would have kept bulls in the trade. Bullish reversal candlestick, and they were a day behind here. We didn't see the bullish action on Wednesday. We saw a big bullish reversal candlestick on Thursday, and then a lack of follow-through on Friday. So we have not confirmed this bullish reversal candlestick. Everybody else that we've looked at so far had a follow-through day besides EMC. They did not as well, but a bullish reversal candlestick, seeing confirmation, and we didn't get it here. So we closed at the low of the day. I'm looking at 1095, anticipating that's going to break on Monday, and then we'll be looking at where we form support on the way up from Thursday. Weekly time frame shows you how big and bearish that move to the downside was, and the lack of volume in CMED makes it a really easy mover, and obviously we saw that to the upside. Nice big bull break here right when we were heading to earnings, and now we're seeing it to the downside when the sector sees fear. Names that do not have a lot of volume and bid and ask support see a lot more volatility. OWCP consolidating after that huge move to the upside. No surprise there, multiple hundreds of percent. You're going to consolidate significantly. And anytime you see a name go multiple hundreds of percent in a few days, always, well, for me, I'm always looking to lock in that profit and reload lower if I do like the story and I want to be fundamentally invested. But unless there is some groundbreaking news that is going to change the history of the company forever, a multiple 100% move in a couple of days is not going to hold. People are going to lock in their profit. And we saw that here where we made a move from 305, and then 4 days later, we're down at 106. That is a 60% loss in 4 days. And anybody that's long could have sold their shares up between $2.50 and $3, a big window where you could have reloaded lower and gotten, 50%, even 20% more shares for the same amount of price. So where we're at now is we are reaching this equilibrium. Here's our low of the pullback at 136, our lower high at 167, our higher low at 117, and you can see how tight we're getting as volume drops off. So this is a little bit more of a developed equilibrium pattern. Highs and lows, tighter range, volume dropping off. The range I'm watching right now is 133, a double top the past 2 days, and support of 117, 118. So it's a pretty tight range, a break of 117, and we're looking down at 106, and a bull break of 133. We're looking at 137 and 167. So we can anticipate a break in this tight range, likely on Monday, and if we don't get it on Monday, certainly on Tuesday. Expect a spike in volume and a spike in volatility in OWCP early next week. Weekly time frame still strong, holding higher lows, 104, 106, 107. So we are still in control here by the bulls, and we could pull all the way back, and as long as we form a higher low compared to 49 cents, this long-term uptrend remains intact. So still a lot of wiggle room, but again, we have pulled back 60% from the high, and that is a big pullback. GRNH, getting very, very, very tight here on the daily and weekly time frame. The 200-day moving average support is holding down at 7.2. We've got clear resistance in the mid to low 8-cent range, and what I'm watching is this weekly time frame. Here is that equilibrium. You're going to hear me say this all the time because it's everywhere. Here's our breakout high, low of consolidation, lower high, higher low, and here we are getting very tight. 2 weeks ago fit within the range of 3 weeks ago. This week fit within the range of last week. Multiple inside candlesticks in a row. The volume is dropping off as the range shrinks, and we're getting tighter and tighter, and a break is imminent. A break of 737 will be bearish, and a break of 84 will be bullish. And I'm watching this 50-week moving average support. We've battled to hold this level pretty much the past 8 months, where we've been bouncing off it time and time again on these consolidations, and we need to see the 200-week moving average resistance break for the bulls, and a loss of this 50-week, we're going to be looking down at 5 cents. So it's getting tighter and tighter, and a break is imminent here on GRNH, very likely this coming week as well. CBIS, bulls seeing some upside here, increasing bull volume, and what stands out is the closes at the high of the day the past 2 days. So the bulls have some nice momentum. We are still in a lower high pattern here on the daily. You can see we have a top up here at 13.65, then 12, then 10.1, and now here we are at 9.33. The bulls must break 10.1 to break this lower high pattern and to be heading back to the upside. The bulls built a base down here. We've got 7.5 as the absolute must-hold level. We've got 7.72, and then 7.75 and 7.78. So a couple support levels in the 7.7s with 7.5, the must-hold level. But the bulls do have momentum heading into next week. The weekly time frame, look at these nice long lower wicks, both off the same level. 7.72, 7.75, middle Bollinger Band is picking up. This is a bullish reversal hammer. It needs green and confirmation this coming week. And a break of 10.1 would do it in terms of giving the bulls nice momentum to be looking to head back to the upside here in this overall long-term chart. So that's a lot to take in, but what we have overall in the Canadian MJ sector is fear. This is fear, and this is fear depicted on this chart with price action, and this is how we utilize technical analysis to be able to capitalize on over-emotional traders and investors. So I appreciate you watching. Feel free to ask any questions, and the most opportunity in terms of volatility this coming week are going to be in OWCP and GRNH, in my opinion, because of how tight we are. And for everybody else, we're going to be looking to form a higher low either Monday or Tuesday, and we're going to be looking for this range to continue to tighten. And we'll check back in next weekend, and we'll either be just breaking out of this tightening range by then, or we'll be on the verge of that break, and we will see where we are at. So I appreciate you watching. Have a great weekend. See you soon.